What's up? Just kind of rolling in. We're going to wait for the interest rate hike to come out in 18 minutes from now. And then we're going to watch Powell talk in about 45 minutes from now. In the meantime, we can discuss what do we think is going to happen, what types of scenarios should we plan for, stuff like that. Streaming live on TikTok and YouTube. What's up, everybody? Yeah, the meeting today is going to be interesting. Is he going to do 0.75 or is he going to do a whole 1%? Because the market is pricing in the 0.75. About 3/4 of people think it's going to be a 0.75. So there's a decent chance they're going to do a full 1%. If they do the 0.75, what's that going to do to the market? If they do the 1%, what's that going to do to the market? I think the biggest thing to watch today, though, what I'm really interested in, is to see what Powell says at 2:30. So we're going to watch that live on here, too. What's up, everybody? What's up, Stonky? What are your guys' thoughts about the interest rate hikes today? If you guys, if 0.75 comes out, what do you think that's going to do to the market? If 1% comes out, what do you think that's going to do to the market? I'm just waiting for the hike to come out here in, about 15 minutes or so, give or take. So what do you guys think is going to happen? Well, I mean, we're just kind of waiting here for about 15 minutes to see what the hike's going to be. Is it going to be 0.75? Is it going to be 1%? All that. But meantime, we can talk a little crypto. I mean, what do you guys think right now? Any new projects? Anything you're really bullish on? Farmer gave a 1. Oh, you think 1%? I see. It very well could be. If it does 1%, what would the market do? How would the market react to 1%? It's not expecting 1%. So I think it could go a little bit at 1%. But at 0.75, I think the market might go up. But I think it's going to reserve itself to hear Powell talk, to hear what he says. And I think that's going to be the biggest thing, is to listen to what he says at 2:30 Eastern. I'm out Pacific, so 11:30, so about 45 minutes from now. Stonky says 0.75 will scare retail to dip and then bot up into a rally by the end of day. Interesting. I think everyone's expecting at least a 0.75, so when that comes out, I don't think anybody's going to be surprised by that. So I don't think that would affect markets. That's my thought. But maybe there might be a dip and then close higher in the day, for sure. My thoughts are, so far, is that most of what's going on today is going to depend on what Powell says. Odds are he does a 0.75. Maybe he does a 1. If he does a 1, I think markets will go because they didn't expect that. Crash, no, but I think that we would see some red. But I think a lot of markets are going to wait to make any major decision till he says something. And I'm going to try to place a trade while we're on the stream, too. Brand new to crypto, just here for the ride. Cool. Welcome, Blackwell. You're here at the right time, man. I'm not kidding. Like, you're really here at the right time. In the deep bear market, that's the best time to be here, because that's when the best investments are made. It's when you get things at the cheapest. Personally, I'm in long positions right now in crypto. I see that. Funny enough, I'm kind of inclined to go long too. That's where I'm leaning. When's the Fed meeting start? The Fed meeting is in 45 minutes, and the interest rate hike announcement publish is in 14 minutes. Yeah, it was cheap. It is cheap. Give it 2.5 years. Since you're new to crypto, Blackwell, be sure to look up the Bitcoin halving and study everything you can about the Bitcoin halving. The most important thing I can tell you. Why have a long now? Don't want to wait. I don't have one right now. It's anticipation. I was going to take a long yesterday. That would have been a really good decision. The charts were showing it to me. Right now, when I look at the charts, let's go to Bitcoin real quick. This is a lifetime chart of Bitcoin, so let me zoom out here a bit. This is Ethereum. Lever Atlas showed me a nice bullish divergence right here, right? Price going down, momentum going up. That's usually a pretty good sign. And I was going to take a long, and I don't know why I didn't, but I didn't. But I think overall, we're printing a top here in the overbought zone, which is above this white line. So interesting. And we're coming to this trend line up here. So I don't know, man. I got my buy bit. I'm here, ready to place a trade, but I don't know what one I want to place at the moment. Let me type in BTC real quick. Let's take a look at that. We got 72 people in here and only 195 likes. Could you guys send some likes? Let's try to get to like 500. That'd be pretty awesome. Looks like Bitcoin's getting into the overbought zone too. When you get above this white line right here, that's overbought. So we're getting there. We had, again, a nice bullish divergence. Price going down, momentum going up. Yeah, there it goes. There it goes. And I think we're going to be printing here on the 1 hour time frame. We'll see. We have this, I mean, this is the 300 moving average, so this is a 300 hour moving average. But if you follow this over right here where Bitcoin is, well, it's a little above that. We do have this Fibonacci line back here, but yeah, it's seems to have gotten above that. I'm still inclined to go long though, which I feel like the charts are telling me to go short. Ugh. I don't know. Gosh. I don't know, man. The interest rate hikes will be published in about 10 minutes. Hey, we got over 500, over 600. Wow. You guys are awesome. Let's see here. Oh, there were some comments. I like longs till end of August. Next earning runs in October, November is going to be really upsetting. That's a long time to place a trade right now, along in a bear market. That's interesting. That's an interesting move. 1% Powell said we may need to ramp up interest rate increases and reduce our balance sheet. He has said that. Did he say that like this week at some point? Market to drop some? Possibly. Possibly. ISO 20022, the main 5 coins, do you think they will moon? No. Not anytime soon, anyways. But I'm pretty bullish on XRP. Let's see here. I'm long on gold. Should I close? Can't give you that kind of advice. I don't follow gold much, but I saw gold take that dip into the 1700s. Like, you don't buy gold to get rich. You know, you buy gold to preserve wealth, and you try to buy it when it's undervalued. It seems undervalued to me, but I don't know. I'm not a big gold studier. End of August, we close monthly above 20K and go to 30K. That very well could be the case. Very well could be the case. Useless information. Thanks for the follow. Hey, if you guys could, anyone not following, hit that follow button. That'd be pretty great. That'd be pretty great. Oh, we're at 1,200 likes. Wow, you guys are awesome. Closer to ETH merge September 19th will pull the crypto market up. Maybe, maybe not. L. Ron Hubbard? Scientology? It's funny. It could. It could. It could. But we have to really consider the overall macro too, like stock market, etc. So we'll see. It's really important what Powell says today about. It's really important what he says. We got to listen really closely because that's what everyone's really looking to. Basic attention token. That's an interesting one. I think the rate doesn't go up today. The rate will 100% go up today. Or do you mean to 1%? I'm not sure what you mean because there's definitely going to be an interest rate hike today. Are you still bullish on XRP? Oh yeah, for sure. I've been buying XRP all this week actually because I shared my thought on it. I was like, I really thought about it, and I'm like, the all-time high of XRP is about $3, and that was in the 2017 bull run. And XRP should probably be about number 3 or 4 in market cap, and it should probably actually be very, very steadily in the number 3 or 4 spot with the next one behind it, well behind it. So I thought, I think there's a really reasonable chance that big XRP gets to $10 in the next bull run. So it's in the 30 cents right now. Yeah, I've been buying XRP. The news has been warning of the hike to warn the public. Yeah, we've definitely been monitoring that. I'm back, new account. Hey, what's up, Ranjit? Why'd you get a new account? It's Ranjit, and yeah. Why'd you get a new account? Huh? Entertainment, thanks for the follow. What do we got here? 8 minutes till the interest rate announcement comes out. And then we'll watch the live meeting at 2:30. Stream live on TikTok and YouTube. Let's see here. Let's go over here. Would you... I think this is where it will publish. It'll be interesting. I mean, I think it'll be 0.75, but it very well could be 1%. It very well could be. If Powell really wants to get Volcker, like he said, he'd do 1% and just get it going, especially since they're taking August off and they won't be back for almost 2 months. There won't be another FOMC, a Fed meeting, for almost 2 months. And there's going to be 2 CPI inflation reports before the next Fed meeting. 2. So I think he should just ramp it up to 1%. That's what I think. But what do I know? What if it's 1.25, market will dump? Yeah, for sure. I think that's very unlikely, but I agree with you. It definitely would. Do live trade based on report? I might. I have my Bybit up here. If you guys want to check out Bybit, it's where I trade crypto. That's not buying low and selling high. Click the link in the TikTok bio. It'll take you to the resources page here. This is Bybit right here. It'd go higher than 75. Do you think we get a big dip? Big dip? I don't know. Dip for a minute? Maybe. But I think what we're really going to be wondering is what's he going to say? Do you think the ISO coins will pop in November when they start rolling? Maybe, but it might be a sell beforehand type thing, because you got to remember how much pricing in goes into things before they ever happen. Price prediction ETH in what time frame, Alan? XRP already survived about 2 vicious bear markets and lawsuit and still number 6 on leading crypto. Exactly. And I'm not some XRP army guy. It's just its use case is so fucking huge, and its customers and potential customers it's had lined up for years are humongous. We're talking massive institutions. So I just see a lot of reward to risk. You know what I mean? Callie, yay. I mean, I might. We'll see. How long till meeting? The meeting is in about 34 minutes, and the interest rate publish is in about 4 minutes. Will the merge bring all coins in the ETH ecosystem higher than coins that's not on ETH? That's an interesting question. I don't think that's going to have that much of a bearing on it. I think if ETH goes up, most of the crypto market, period, is going to go up. December. ETH by December? I don't know. I think out at least like 2.5 years from here. And I think ETH will easily be 10K within 2.5 years. And I think there's a really good chance it's 20K plus. By December, I don't know. Right? I would encourage you to look out further than that. Some of the top banks in the world are using XRP now, exactly. And there will be a lot more that do, and there's a lot more that already want to. There's a lot more they already have lined up to use. And they're just waiting for this lawsuit to get over and then get us into the next bull run. And I just see XRP, like if it had a $3 high in the 2017 bull run, I think it would have very easily had an over $10 high in this last one had it not been in that lawsuit the entire time. So for it to get to $10 in this next one, bull run, just seems pretty likely to me. I think it can get to $20. It's insane to think about, right? When people are going 10,000, 50,000, those people are nuts. That's not going to happen ever, because that can't happen. That can't happen. because that would be more than all the money in the world, basically. Bro, do you think Coinbase is in trouble? I don't know, man. We hear rumors. Well, I don't see anything solid, but I don't know. ERC20 coins are a percent of ETH, so if ETH goes up, they'll go up, my understanding, right? I wouldn't say that, Ron G. I don't think they'd go up any more than any other, because they're their own thing. Ace, what's up, Ace? We're going to watch the Fed announcement together. Yeah, the Fed live, the announcement, the talk, and then we're gonna, in 2 minutes, we're gonna see what the interest rate hike is, and then the Powell will come out and talk in half an hour. And no, ERC20 coins, they're not a percentage of ETH. It just means they are on the Ethereum network. Do you like Matic? I love Matic. Love Matic. ERC20s aren't pegged to any arbitrary value of ETH. No, they're not. So if the Fed goes 1.25, you mean a major chance to buy? I think in the very unlikely event that it goes 1.25, that would very much catch the market by surprise, and I would see a like that. What those Bitcoin look in person, just numbers and zeros. Do you think ETH merge will make Matic worthless? No, Matic and Ethereum make each other stronger. Matic makes Ethereum stronger. It's almost time here. Let me refresh this. We'll have to see what I think this is the page where they publish it. It's not the easiest thing to find. Just waiting. Drinking my coffee in the meanwhile on this hot ass 90-degree day. Listen, for Seattle, 90 degrees is ridiculously hot. Come on. So going off the video you posted, is AMP a dump? Should we get rid of it? I didn't make a video about AMP, so I'm not sure what you're talking about there. God damn it. I thought it was this page. It's hard to find. And they only do this once a month, and I always forget what fucking page it's on. Ooh, Bitcoin just started moving. Look at this. ETH just started. Oh, hit an alert for me. Wow, what's the hike? What is it? $75. Yep, they did 75, which is what was expected. They did 75. So I would say that's probably bullish-ish. I really want to wait to see what he says. Let's go to Bybit here. What's going on? Yeah, things are going. Yeah, it's not really moving much. It's not going crazy. That was pretty much what was expected, so things are pumping up. The 1 hour, let's go down to like the 5 minute, 15 minute. So we broke that. Now this one we're going up. I'm not expecting much here. I really want to see what he says. Any views on Hex or Pulse Chain? Not hugely, but whenever Pulse Chain comes out, I should be getting some of it since I did the sacrifice thing. ERC20s can be backed by ETH, but that's an uncommon case. Yeah, and that would be something to do with their protocol anyways. 0.75 bullish. Yeah, for the most part, but expected. I don't know. I don't know if I'm willing to say bullish yet. You know what I mean? Anything below 150. Thanks for your time. Where's the like button? There should just be a little. All you do is you just tap the screen. Just literally, like, tap your button on the screen, like that. I'm more bullish, taking a 2.5%. So yeah, so we're at more like 2.25% interest rate right now, which is pretty big. 2 straight months of 0.75. It's important to realize that they did 0.25, then 0.5, then 0.75, and now 0.75 again. So, yeah. Should have I taken a long here? I don't want to hop in now. I don't want to chase it. I suppose I should have. This candle is pumping, which is kind of what I expected if they did that. But other than that, where's ETH at? Anyone that tells you that crypto doesn't track along with the stock market, remember this moment. I did take a quick short here this morning, made just a little scalp here, but I definitely should have taken a long. I was going to get in a long position. Now I don't want to chase it, although Lever Atlas, this is 15 minute, but it's showing me, I don't know, man. I'm not going to chase this thing. I'm not going to chase it. You know what I mean? I'm not going to chase it. Yeah, definitely not going to chase that. So the Fed meeting, so we'll watch the live show right here in 27 minutes. Because what Powell says is going to be the biggest thing, even more than that, because that was what was expected. Not hawkish enough. Watch inflation rise again. I agree. I would have liked to see him just do 1%. Really show the market they're serious and scare them a little bit more. Because 0.75 again, that's what's expected. Now that is going to affect businesses, right? Because the way that there's so many zombie businesses out there that are just running off of loans and not actually making profits. And these interest rate hikes, like, they are going to be, you're going to start hearing some businesses close their doors eventually, by the end of the year for sure. In my opinion, 1% hike based on the previous increases, 25, 50, then 75, so maybe 100 now. Well, no, they've just published it. They did 0.75 again. So they've done a 2.5, a 50, a 75, and a 75. Because my thinking is it because of everything else, such as the commodities coming down, you know, lumber, copper, gold, silver, all these commodities have really come down, kind of broke that fever. And we had that inflation print of 9.1. I think there's a really good likelihood that probably 9.1 is probably peak inflation, at least for now. 7.5, how this might affect market? Not much, because that's what was expected. I really want to push home the point that pricing in, the prices you see things at, a lot of what's expected or anticipated or speculated on is already priced in. So this 0.75, it was a confirmation of what people were thinking, so now that's why it's taking off a bit now. It's not bad news. It's just what was expected. So things took off a bit. Good spot to take a long. And I should have just had my longs ready, frankly. Because now, what do we do here? What's ETH at? I mean, it had this super pump, and now it's come back down. So, and this is a 1 hour candle. Let's go to the 15. This 15-minute candle went from basically 1500 to 1580. 1, 2, 3, 4. Went up like 6% in 15 minutes. So it's nice to be in those things. I really kind of anticipated a 0.75, and I knew this was going to happen. I was pretty sure if it was 0.75, we were going to see a quick pump. But now it's coming back down. Everyone's waiting for the meeting. That's why the charts really do show you what's going on. Volatility expected, but who knows what will happen after. It's true. And it's a long game, man. Like, I've been saying ever since last week that I think we've bottomed. I think there's about an 80+% chance that we have bottomed, and you're not going to see lower prices than we've seen. Maybe it comes back down. Maybe we see Bitcoin under 20 again. Maybe we see ETH around 1,000 again. But I think there's just a high probability that we don't see lower prices and we've bottomed. And so that's why I've been pounding the fucking table since last week to everybody saying, listen, what's the risk reward right now? The risk is very low. the reward is very high, right? To buy now and wait till the next bull cycle. And a lot of people still push back on me saying, but it's going to go lower. I'm like, what if it doesn't? What if it doesn't? If it does, great. Buy more. But what if it doesn't? And you just sit here holding on to this pole of I'm going to wait to buy because I believe it's going lower. I'm not going to buy much now. It's a big mistake. It's a big fucking mistake. Straight up. Not financial advice, just my opinion. Got to be a dump soon. People about to get wrecked. Why do you say that, Darrow? If Powell comes out and says something that scares people, because we're all sitting here, I'm sitting here personally, waiting to see what he says about what they plan, what their thoughts are into the next meetings. Now, the next meeting isn't until like September 19th, so it's like 2 months away because they take August off. And there's going to be 2 CPI inflation reports before then. Dumping? Is it dumping? Does not look like it's dumping to me. Guys, I would just, with your words, like pumping and dumping, try to expand your vocabulary. Like, just because something goes up or down a little bit doesn't mean it's pumping or dumping. It's just going up. Pumping, in my opinion, and dumping are much longer, deeper things than a quick shoot up or down of 5%. In crypto, anyways. Q4, another 0.75 or 1. Well, we have at least one more in Q3, which will be September 19th, I believe. And that's what we're really waiting for, is to see in 20 minutes from now. We're waiting when Powell comes on. We're going to wait and see what he says. The main thing that I'm listening for is to see what he says they are considering or thinking about for the rest of the year, especially September. And then they don't have another meeting in October. It's early November, so September, November, December. There's 3 more Fed meetings like this in the year. Over on YouTube, Eddie says, what do they mean they're going to change the definition on recession? Daily Bar says it's fear-mongering. Changing the definition on recession wouldn't be fear-mongering. That's the government trying to keep the people calm. That's all it is. They're just trying to keep the people calm. That's all it is. They're trying to not, because the more people freak out, the more volatility, the more fear, the more price drops, the more negativity and badness. So they're trying to just keep the public calm by just making shit up. And that's fine, because it's all made up anyways. I mean, what's the definition of a recession? Whatever we decide it is. That's it. It's all made up. Everything in life is basically made up. So what do we decide? Okay, that's going to be it. So if we want to change the definition, I guess we could. But I think the 2 GDPs being negative should probably be should be a recession. But if you want to get into spectrums of recession, I think that's probably a better route to go. But Janet Yellen scheduled a out of nowhere meeting or talk tomorrow, which is when the GDP numbers come out. So my guess is the GDP numbers are going to be negative, and we're going to go into a recession by that definition. And she's going to come out and say exactly, we have strong employment, commodities are coming down, we have this, we do have growth, it's not as much as last year, but it's growing, we have this, we have this, we have this. So we don't think we're in a recession yet. Yes, technically there's 2 negative GDP quarters, but with all these other factors, we think we should expand our idea of what a recession is, and I think we're not in a recession yet. That's what she's going to come out and say, is my guess. And that's why she scheduled this meeting. She scheduled it because she knows tomorrow is going to be a negative GDP number, and she's trying to keep the public calm and the markets calm. So no recession, says Bart News. We won't know till tomorrow, the GDP thing, but I mean, we're in a recession, right? Sure, but unemployment hasn't shot up. But from my understanding, that's more of a lagging indicator. It's more of a lagging indicator. Let me move this over a bit so you can see the YouTube comments. More of a lagging indicator. So it's not something that happens at the beginning of a recession. It happens during a recession. Are we going to see a fall in Bitcoin after the meeting? I don't know, Siddhant. We are definitely listening to see what Powell says, and he'll be coming on in about 18 minutes. We got 1,700 likes over here on TikTok. Could you guys pump us up over 2,000? That'd be pretty awesome. Housing market price drop would do it like those subprime mortgages. That's a really good point, because I think the housing market has a good ways down to go. I mean, not every single city. I think some of the ones to really watch would be Phoenix, Austin, Tampa, Nashville, maybe Miami, maybe the Carolinas, Boise, Salt Lake City, Provo, Denver, maybe a bit. Cities like that, they're already seeing some pretty hard hits, but I think we got further down to go. I do real estate too, so I monitor this stuff pretty closely, and I've been saying this for months, and no one wants to hear me. I've been saying, listen, interest rates are going up. Who wants to get a mortgage at these all-time high prices with this very high interest rate now? Because if I was buying a $500,000 house, right? Well, let's just say this, whatever the price was, whatever. Say my monthly payment was going to be $2,000 in January. Well, now my monthly payment for the same priced house would be about $2,600. So massive decline in mortgage applications and buyer interest. What's going to happen? We have more houses coming on the market now. Houses are staying on the market for longer. There are more price drops happening, and prices and starting prices of houses are coming down now, and low buyer interest. So it's becoming a buyer's market. It is a buyer's market, but I think it's going to become even more so of a buyer's market. Give it 6 to 12 months, I think, is where we'll probably peak in terms of maximum buyer reward. These are not high interest rates. Cassie, why do you say that? Massive wow. Thanks for sharing the live, Mark. Hey, anyone that hasn't, hit that follow button over there. Give your boy a follow if you're digging this so far. Powell will come on in 15 minutes and we'll watch the live stream together. I'll give you my thoughts as it's coming in, but I'm not going to interrupt it too much. All news channels will be spreading recession fear. I don't know. I don't know if they will be. They're going to do whatever gets them the most views. So it might be that. Thanks for the follow, Wraith. Over on YouTube, Daily Bar says, do you think the announcement will affect the volatility for any specific groups of altcoins, for better or for worse? That's a good question. That's a thoughtful question. Do you think the announcement will affect... I don't think it will affect any group more than another. I think they'll move together. Wraith says maybe. Mark, thanks for the follow. Bitcoin just hit 22. That makes sense. Just hit 22. Let's go back over here to ETH's at 1540 again. It does seem to be climbing up, but when you see a wick like this, you gotta be like, what happened? And what happened was 0.75 came out, and that's what was expected. The only thing that was holding this back was there was that small chance it was going to be a 1% hike. If it were a 1% hike, we would have seen it go down. But since it was what people expected, it went up. But right now, I think the market's kind of on pause. Trading's going to trade sideways until Powell comes out and talks. But it did wick. Bitcoin wicked up to about 22.2 here. I bought a good amount of Ethereum yesterday. A lot of stuff this week. Ethereum, Gala, XRP, and Sol. Those are the main things I bought this week. I was buying ETH as it kept ratcheting down, and when it got into the 1300s, I bought like 5 times. But I'm buying for the next bull market, right? So when I'm buying right now, I'm looking out 2.5 years is when I plan on selling. You the guy that makes crypto videos on TikTok, Chucky? I'm one of them. There's more than just me. Bitcoin, yeah, just wait for the market reaction yet. Powell will be up in 13 minutes, so we'll watch that together. I bought at 1100 last. In my opinion, that's a very good decision. Hold that, and also in my opinion, I would hold that shit until the next bull cycle, until probably 2025, probably early to spring 2025. That's my planned exit time frame. And it's not just pulled out of my butt, because that'll be about a year after the Bitcoin halving. The crypto market typically tops somewhere around a year after the Bitcoin halving. So, but I also have sell prices. So if ETH hits 10K, which I think it will, I will sell a good portion of my ETH, because that's my exit price. And if it goes higher, awesome. I have planned profits, and I'm going to stick to it. I'm not trying to sell the top and buy the bottom. Gala is a great price. I agree, Chuck. I bought some more Gala this morning, under 5 cents. I'm swooping up Gala under 5 cents, because I think Gala has a pretty good chance to be a 100x in the next bull cycle from where it is right now. So that means I think Gala can get up to about $5. Yeah. I think it'll easily get to $1. I mean, that's basically where it was this last bull cycle, and I'm very bullish on blockchain gaming. Powell will come on in 11 minutes, and we'll watch that together. Throw some likes out if you could. See if we can hit 4,000. That'd be pretty awesome. Yield farming and skate. Depending where you're yield farming, why not wait till 2030 for the next halving? The next halving is in 2024, and then the halving after that will be 2028, and then the halving after that will probably be 2032. So yeah, not BlockFi. No, I would hope not. But I'm staying away. I've been staying away from all farming and yield stuff. I just have stuff sitting in my trading account so I can trade with it, and in my ledger, and that's it. If you don't have a ledger, you're going to pay the price. Straight up. If you don't have a ledger, you're going to pay the price, and you are going to lose crypto. Click the link in my bio, take you to my resources page here. This is the link for Ledger right here. This is the page. This is Ledger. And this is by far my favorite place to buy crypto, because I can get XRP here. And if you use this link, you get $20 free. Isn't Gala Games going on Epic soon? Good question. Gala isn't, but one of its games is. Grit is going to be on Epic Games. It'll be the first ever NFT game on Epic Games and on any of those major platforms, because the two major platforms are Steam and Epic. Hold on a second. What's up? I had a knock at the door. What's up? Oh, coffee. I have coffee, but I'm glad for more. Thank you. There we go. Didn't know I requested coffee, but I'm glad I got some. What exchange was that, Robert? Yeah, if you click the link, you'll get the $20 free. It's Uphold is what it is. What I really like about it, not sponsored or anything by them, that is my referral link. Whatever. I get maybe $20 if you sign up there too. Whatever. Not going to change my life. But what I really like about it is I can take my card, and deposit money into Uphold from my card with no fees. If I send $100 from my card into Uphold, I get $100 on Uphold instantly. And I can buy crypto instantly. And here's the really good part. I can send that crypto off. So when I say today I put $100 on Uphold and I buy XRP, I can send XRP off as soon as I buy it. So I can put money on and send XRP off within 2 minutes. And there's almost no fee. There's no fees for putting money on there. There's a little network fee for sending XRP, but that's always going to be the case. by far my favorite because I want to buy and send it off. And actually, the card I used to buy, let me show you real quick. The card I used to buy, hold on. The card I used to buy is this. It's my Fold card. So what this does is it allows me to get Bitcoin rewards. So I use that card to put money on Uphold for free. It doesn't charge me any fees. And I get free Bitcoin before I ever even buy any crypto. Like today I put on, I think $100 to buy a little Gala. And I got $2 back in Bitcoin. So I got $2 in Bitcoin just for putting money on Uphold. And then I bought Gala. And I sent Gala to my Ledger wallet. Overall, I got paid to buy Gala in Bitcoin. It's crazy. So by far my favorite. If you don't have a card like that, definitely get one. I like the Fold card. Again, my resources page. Click the link in my bio. That's where all this stuff is. There's Uphold right here. There's the Ledger, and Fold is down here. That's the Fold card. Join the Discord if you haven't yet. And I am offering crypto consults again. I probably won't offer these for very long because they get pretty booked up. But if that's something you want, I would hop in there before I take those down again. But serious people only. Well, actually, I don't care. Just have a plan of what you want to talk about, you know. Let me pour some coffee in here. I'm currently waiting for my Crow card. It's the platform I use to upload and withdraw fiat. Okay. Found a nice niche cap project today. Okay, awesome. What exchange was that? I already answered that. Okay, why not stake? Because when you stake, you're putting your crypto in someone else's hands, and if they fuck it up, it's gone. So in a bear market right now, it's just not worth it to me. In a bull market, sure, but not in the bear. I have other plans. I have other things I do. Buy crypto now or wait, in my opinion, for the last week especially, I've been pounding the table saying, I think we've bottomed. Buy. Buy, 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 buy. Not financial advice, in my opinion, but think out further. Like, whatever you buy, don't sit there and lose sleep over money being in it, because it's gonna fucking go up. Just give it some time. Give it at least 2 years. People put money in a 401k and retirement fund for 35 fucking years to hopefully build it up a little bit. I'm talking about 10xing your money in 2 years. Have patience, please, for your own good. Not speaking directly to you, I'm speaking to the masses of people because I run into this all the time and I'm just watching them be so emotionally illogical. Moves, is that kind of like a step-in competitor? Because I really like step-in. Actually, step-in shoes. You can get a step-in shoe now for like one sole. It's like $40. And you'd be earning, I'd say roughly 75 cents, $1 a day walking or running or jogging or whatever you do. Callie says preach. I try not to preach too much, but this is one time where I just gotta like grab people, say, stop being stupid. Stop it. Stop it. Step-in competitor. I'm not interested in step-in competitors. I think step-in is the leader in this shit. I mean, it partnered up with Ape now. It's with fucking Bored Ape. They're now partnered with Bored Ape. There's an Ape, so they got 3 realms in step-in. They got Solana, Binance, and Ether. And the Ether one is the Ape realm. They've partnered with Bored Ape, man. That made me so bullish on step-in. And here's what I gotta say, after using step-in for months, it's not even really about the money that makes me so bullish about it. It's just a little bit now when we're in the depths of a bear market. It changes your habits. The fact that I know that if I don't go use my step-in energy, I'm leaving money on the table like $1 or $2, whatever, it makes me get up and move. And it's built a really good habit for me where every day I go on, well, you got to walk for at least 10 to 20 minutes, depending on what you got there. But I go on like a 40-minute walk now, every day. And stepping really keeps me on track. It really fucking does. And I'm not the only one. This is a very common thing that people that use step and say. It builds better habits of exercise, of moving. I'm for it. Like, I'm just for it. Like, I think it's a wonderful thing. When's the Fed meeting? It's in 2 minutes. And then we'll watch it. Whether we have received an update from Feds why crypto is pumping, because the interest rate did get published at 2 and it came out as expected at 75 basis points. Pumped it up, came back down, now it's coming up again. We'll see. I should have taken it along. I know better. I should have known it was going to be, I should have just had it in place. Pumped up so fast. Here's the meeting. He should be out in like a minute. Thanks for the follow, Kish. The Fed meeting is in like 1 minute. Thoughts on quant? Here's what I'll say about quant, man. People, I get asked about quant so much, and all the time, literally for months and months. So that really says something to me about how the market feels about quant. Quant and H-bar, I get asked about so goddamn much. Come on out, Powell. ETH Classic. ETH Classic could see a short-term pump because a lot of miners don't want to go over to Homeboy. Here we go. Here we go. Here comes Powell. No more Black Swan event coming. That's the thing about Black Swan is you never know if they're coming. That's why they're Black Swan. They're very unexpected.
Good afternoon.
Good afternoon.
My colleagues and I are strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down to our 2% goal if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the FOMC raised its policy interest rate by 0.75 of a percentage point and anticipates that ongoing increases in the target range for the federal funds rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. And I'll have more to say about today's monetary policy actions after briefly reviewing economic developments.
Thanks for the roses.
Recent indicators of spending and production have softened. Growth in consumer spending has slowed significantly, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened, in part reflecting higher mortgage rates. And after a strong increase in the first quarter, business fixed investment also looks to have declined in the second quarter. Despite these developments, the labor market has remained extremely tight, with the unemployment rate near a 50-year low job vacancies near historical highs, and wage growth elevated.
Yeah.
Over the past 3 months, employment rose by an average of 375,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics.
I was at a burger place last night and they were paying $20
Labor
an
demand
hour.
is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. Overall, the continued strength of the labor market suggests that underlying aggregate demand remains solid. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in May, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In June, the 12-month change in the Consumer Price Index came in above expectations at 9.1%, and the change in the core CPI was 5.9%. Notwithstanding the recent slowdown in overall economic activity, aggregate demand appears to remain strong. Supply constraints have been larger and longer lasting than anticipated, and price pressures are evident across a broad range of goods and services. Although prices for some commodities have turned down recently, the earlier surge in prices of crude oil and other commodities that resulted from Russia's war on Ukraine has boosted prices for gasoline and food, creating additional upward pressure on inflation. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 2.25% to 2.5%. And we're continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy. Today's increase in the target range is the second 75 basis point increase in as many meetings. While another unusually large increase could be appropriate at our next meeting, that is a decision that will depend on the data we get between now and then. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. As the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. Our overarching focus is using our tools to bring demand into better balance with supply in order to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to return inflation to our 2% longer-run goal. This process is likely to involve a period of below-trend economic growth and some softening in labor market conditions, but such outcomes are likely necessary to restore price stability and to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. thank you. I look forward to your questions.
Interesting. So what I heard was he's basically like, anything's possible. We're going to look
Hi,
at the
Chair
data.
Powell. Thanks for taking our questions.
We
Rachel
could
Siegel
raise
from the
interest
Washington
rates higher. We
Post.
could. We
Wondering
don't know what
if
we're
you
going to
can
do.
walk us through your thinking around the decision not to go for a full percentage point increase.
Good question. Great first
We saw
question.
a ramp up after the May CPI report came in hotter than usual, and then obviously the June figure did too.
He's
Was
going to
there any
talk about a
discussion
break
of a
in
stronger
commodity
hike at this
prices
meeting?
and shit like that, probably.
Yeah, thank you.
Sure. So we did judge that a 75 basis point increase was the right magnitude in light of the data and in the context of the ongoing increases in the policy rate that we've been making. I'd say that we wouldn't hesitate to make an even larger move than we did today if the committee were to conclude that were appropriate. That was not the
Hawkish.
case at this meeting. There was very broad support for the move that we made. You mentioned the June meeting. We had said many times
Inflation
that we
doesn't
were
come down,
prepared
we
to
will
move
slap that.
more aggressively if inflation continued to disappoint. And that's why we did move to a more aggressive pace at the June meeting, as we said we would do. At this meeting, we continued at that more aggressive pace as inflation has continued to disappoint in the form of the June CPI reading.
Thank you so much for taking our questions. Colby Smith with the Financial Times. As the committee considers the policy path forward, how will it weigh the expected decline in headline inflation, which might come as a result of the drop in commodity prices, against the fact that we are likely to see some persistence in core readings in particular? And given that potential tension and signs of any kind of activity weakening here, how has the committee's thinking changed on
Hawkish
how far
means
into
aggressive.
restrictive territory
Dovish
rates might need
means
to go?
The opposite.
So,
Raising interest rates.
I guess I'd
high
start
would
by
be
saying
hawkish and aggressive.
we've been saying we would move expeditiously to get to the range of neutral, and I think we've done that now. We're at 225 to 2.5, and that's right in the range of what we think is neutral. So the
Neutral
question is,
about 2.5%.
how are we thinking about the path
We're at
forward?
2.25 now.
So one thing that hasn't changed is that it won't change is that our focus is going to continue to be on using our tools to bring demand back into better balance with supply in order to bring inflation back down. That'll continue to be our overarching focus. We also said that we expect ongoing rate hikes will be appropriate and that we'll make decisions meeting by meeting. So what are we going to be looking at? We'll be looking at the incoming data, as I mentioned, and that'll start with economic activity. Are we seeing the slowdown in economic activity that we think we need? And there's some evidence that we are at this time. Of course, we'll be looking at labor market conditions, and we'll be asking whether we see the alignment between supply and demand getting better, getting closer. Of course, we'll be looking closely at inflation. You mentioned headline and core. Our mandate is for headline. Of course, it's not for core, but we look at core because core is actually a better indicator of headline and of all inflation going forward. So we'll be looking at both, and we'll be looking at them at those both really for what they're saying about the outlook rather than just simply for what they say. But we'll be asking, do we see inflationary pressures declining? Do we see actual readings of inflation coming down? So in light of all that data, the question we'll be asking is whether the stance of policy we have is sufficiently restrictive to bring inflation back down to our 2% target. And it's also worth noting that these rate hikes have been large and they've come quickly, and it's likely that their full effect has not been felt by the economy. So there's probably some additional tightening, significant additional tightening in the pipeline. So where are we going with this? I think the committee broadly feels that we need to get policy to at least to a moderately restrictive level. And maybe the best data point for that would be what we wrote down in our SEP at the June meeting. So I think the median for the end of this year, the median would have been between 3.25 and 3.5. And then people wrote down 50 basis points higher than that for 2023. So that's, even though that's now 6 weeks old, I guess, that's the most recent reading. Of course, we'll update that reading at the September meeting in 8 weeks. So that's how we're thinking about it. As I mentioned, as it relates to September, I said that another unusually large increase could be appropriate, but that's not a decision we're making now. It's one that we'll make based on the data we see, and we're going to be making decisions meeting by meeting. We think it's time to just go to a meeting by meeting basis and not provide the kind of clear guidance that we had provided on the way to neutral.
I hear we're not taking our foot off the pedal, but we're going to monitor the data.
Nick Timmerosa, the Wall Street Journal.
could-
Chair Powell,
we could
you've
get
said
gas
that your
harder.
policy works through influencing expectations and that policy needs to be at least moderately restrictive, which means you need financial conditions to stay tight. Futures market pricing currently implies you will raise rates this year along the lines of your June SEP, but then lower them a few months later next year. Are these expectations consistent with the need to keep financial conditions tight in order to moderate purchasing power and bring inflation back to 2%?
So I'm going to start by pointing out that it's very hard to say with any confidence in normal times. In normal times, what the economy is going to be doing in 6 or 12 months. And so to try to predict what the appropriate monetary policy response would be, I mean, of course, we do that in the SEP, but nonetheless, you've got to take any estimates of what rates will be next year with a grain of salt, because there's so much uncertainty. These are not normal times. There's significantly more uncertainty now about the path ahead than I think there ordinarily is, and ordinarily it's quite high. So again, I would, the best data, the only data point I have for you really is the June SEP, which I think is just the most recent thing that the committee's done. Since then, inflation has come in higher, economic activity has come in weaker than expected. But at the same time, I would say that's probably the best estimate of where the committee's thinking is still, which is that we would get to a moderately restrictive level by the end of this year, by which I mean somewhere between 3 and 3.5%, and that the committee sees further rate increases in 2023. As I mentioned, we'll update that, of course, at the September meeting. But that's really the best I can do on that.
He just said we
inflation
expect to
a
raise
little bit
interest
hotter
rates into
than
2023.
anticipated. Has your view of the terminal rate changed since June?
Huh.
So I wouldn't say it was. I think we didn't expect a good reading, but this one was even worse than expected, I would say. I don't talk about my own personal estimate of what the terminal rate would be. I will write down that in.
Come on, Jerome.
It's going to evolve. It's obviously it has evolved over the
Same
course.
number.
I think for all participants, it has evolved over the course of the year as we learn how persistent inflation is going to be.
Say a
And
number.
by the time of the September meeting, we will have seen 2 more CPI readings and 2 more labor market readings, and significant amount of readings about economic activity and perhaps geopolitical developments. Who knows? It'll be a lot. It's an 8-week intermeeting period, so I think we'll see quite a lot of data, and we'll make our decision at that meeting.
He dodged the
Based on
question.
the data.
Gina. Hi, Jarrell. Thanks for taking our question. Gina Smile with New York Times.
Gina.
You kind of alluded to this earlier, but I wonder, in the event that you see several months of very weak headline inflation numbers because oil prices are coming down so much, but core inflation continues to be strong or even picks up, I wonder how you would think about that.
So it's hard to deal with hypotheticals, but I just would say this: we would look at both, and we'd be asking ourselves, are we confident that inflation is on a path down to 2%? That's really the question, and we'll be making, our policy stance will be set at a level ultimately at which we are confident that inflation is going to be moving down to 2%. So it would depend on a lot of things. Of course, as I mentioned, core inflation is a better predictor of inflation going forward. Headline inflation tends to be volatile. So in ordinary times, you look through volatile moves in commodities. The problem with the current situation is that if you have a sustained period of supply shocks, those can actually start to undermine or to work on de-anchoring inflation expectations. The public doesn't distinguish between core and headline inflation in their thinking, so it's something we have to take into consideration in our policy making, even though our tools don't really work on some aspects of this, which are the supply side issues.
Gina, a few meetings ago, asked a question that just tanked.
Steve
market.
Leisman,
She asked good
CNBC.
questions
Thanks for
quickly.
taking my
I
question,
kind of
Mr.
avoided
Chairman. Earlier this week, the president said we are not going to be in a recession. So I have 2 questions off of that. Do you share the president's confidence in not being in a recession? And second, how would or would not a recession change policy? Is it a bright line, sir, where contraction of the economy would be a turning point in policy, or is there some amount of contraction of the economy the committee would be willing to abide in its effort to reduce inflation?
So as I mentioned, we think it's necessary to have growth slow down, and growth is going to be slowing down this year for a couple of reasons. One of which is that you're coming off of the very high growth of the reopening year of 2021. You're also seeing tighter monetary policy, and you should see some slowing. We actually think we need a period of growth below potential in order to create some slack so that the supply side can catch up. We also think that there will be, in all likelihood, some softening in labor market conditions, and those are things that we expect and we think that they're probably necessary if we were to have to get inflation, if we were to be able to get inflation back down on a path to 2%, ultimately get there.
The question was whether you see a recession coming and how that might or might not change policy.
So we're going to be focused on getting inflation back down, and we, as I've said on other occasions, price stability is really the bedrock of the economy, and nothing works in the economy without price stability. We can't have a strong labor market without price stability for an extended period of time. We all want to get back to the kind of labor market we had before the pandemic, where differences between racial and gender differences and that kind of thing were at historic minimums, where participation was high, where inflation was low. We want to get back to that, but that's not happening. That's not going to happen without restoring price stability. So that's something we see as something that we simply must do, and we think that we don't see it as a trade-off with the employment mandate. We see it as a way to facilitate the sustained achievement of the employment mandate in the longer term.
He wants employment to come down. He knows it has to.
Howard Schneider with
anyways.
Reuters. Particularly in regard to expectations, it's been said the last few months that the risks of doing too little outweighed the risks of doing too much. Does that remain the bias?
So we're trying to do just the right amount, right? We're not trying to have a recession, and we don't think we have to. We think that there's a path for us to be able to bring inflation down while sustaining a strong labor market. As I mentioned, along with, in all likelihood, some softening in labor market conditions.
So unemployment's going to go up.
That's what we're trying to achieve, and we continue to think that there's a path to that. We know that the path has clearly narrowed, really based on events that are outside of our control, and it may narrow further. I do think, as I said just now, that restoring price stability is just something that we have to do. There isn't an option to fail to do that, because that is the thing that enables you to have a strong labor market over time. Without restoring price stability, you won't be able to, over the medium and longer term, to actually have a sustained period of very strong labor market conditions. So, of course, we serve both sides of the dual mandate, but we actually see them as well aligned on this.
But as a follow-on to that, given the uncertainty and the sort of paradoxical flow of data you've been getting, if you're going to make a mistake, would you rather make the mistake on doing too much, raising too much, than raising too little?
Ooh.
We're trying not to make a mistake. Let me put it this way.
Come on.
We do see that there are two-sided risks. There would be the risk of doing too much and imposing more of a downturn on the economy than was necessary. But the risk of doing too little and leaving the economy with this entrenched inflation, it only raises the cost. If you fail to deal with it in the near term, it only raises the cost of dealing with it later. To the extent people start to see it as just part of their economic lives, they start to factor high inflation into their decisions, when that, on a sustained basis, when that starts to really happen, and we don't think that's happened yet, but when that starts to happen, it just gets that much harder, and the pain will be that much greater. So I really do think that it's important that we address this now and get it done.
You should have addressed it months ago.
Thanks, Chair Powell. Neil Irwin from Axios. To build a little bit on what Steve was asking, do you believe the United States is currently in a recession? Will the GDP reading tomorrow affect that judgment one way or the other? And has your assessment of the risk of recession changed any in recent weeks?
He already knows what the GDP numbers are.
So I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy that are performing, too well. And of course, I would point to the labor market in particular. As I mentioned, it's true that growth is slowing, and for reasons that we understand. Really, the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow. There's also more slowing going on now. But if you look at the labor market, you've got growth. I think payroll jobs averaging 450,000 per month. That's a remarkably strong level for this state of affairs. The unemployment rate at near a 50-year low at 3.6%. All of the wage measures that we track are running very strong. So this is a very strong labor market, and it's just not consistent with 2.7 million people hired in the first half of the year. It doesn't make sense that the economy would be in recession with this kind of thing happening. So I don't think the U.S. economy is in recession right now. Haven't seen it, and we'll just have to see what it says. I don't. I would say generally the GDP numbers do have a tendency to be revised pretty significantly. It's very hard. It's very hard to accumulate U.S. GDP. It's a large economy, and a lot of work and judgment goes into that. But you tend to take first GDP reports, I think, with a grain of salt. But of course, it's something we'll be looking at.
Hi, Chair Powell. Victoria Guida with Politico. I wanted to ask about the new conflict of interest rules that you all rolled out. Some senators have written asking for those rules to have more teeth and to have sort of more transparency about the Fed officials' financial activity. I was wondering if you could speak to that and whether you intend on toughening those rules in any way.
So those are the toughest rules in place, at any comparable institution.
Talk about tightening.
We think, we thought about this carefully, and we put them in place, and we're building the infrastructure so that the enforcement will be tight. That actually you won't be able to make trades unless they're pre-cleared, and the amount of trades you make will be they'll have to be 45 days or more before any FOMC meeting. It's just I think we've really created a very strong and robust set of rules that will, support public trust in the institution. And again, we're just now, the system is just now up and running, and I'm proud of what we did.
Hi, Katerina Saraiva, Bloomberg News. I wanted to ask a little bit more about the 75 basis points versus 50 versus 25. Can you talk a little bit about what kind of goes into your thinking for, making the decision on how much to raise rates, and, just talking about a very large amount that you alluded to, could that possibly be 100 basis points? And then kind of along those lines, is there any sort of weakness in the economy outside of inflation measures that would lead you to slow your hiking pace?
This isn't TV live stream. It's on the Federal Reserve website.
I'm gonna take that as a question about the next meeting and thereafter. So as I mentioned, we're going to be looking at all of those things: activity, labor market, inflation, and we're going to be thinking about our policy stance and where does it really need to be. And I also mentioned that as this process, now that we're at neutral, as the process goes on, at some point, it will be appropriate to slow down. And we haven't made a decision when that point is, but intuitively that makes sense, right? We've been front-end loading these very large rate increases, and now we're getting closer to where we need to be. So that's how we're thinking about it. And we're, in terms of September, we're gonna watch the data and the evolving outlook very carefully, and factor in everything and make a decision in September about what to do. And I'm not really going to provide any specific guidance about what that might be. But I mentioned that we might do another unusually large rate increase, but that's not a decision that we've made at all. So we are, we're going to be guided by the data. And I think you can still think of the destination as broadly in line with the June SEP, because it's only 6 weeks old, and sometimes SEPs can get old really quick. I think in this one I would say is probably the best guide we have as to where the committee thinks it needs to get at the end of the year and then into next year. So I would point you to that.
Hi, thank you. Chris Rugaber at Associated Press. I wanted to ask about, right now there's a sort of growing gap between the Fed's preferred measure of inflation, the PCE index, and the one that's followed by the public, the CPI, of course.
That kind of looks like Zuckerberg.
Do you expect to handle this divergence if the PCE starts to come down enough for you to consider slowing rate hikes, even if the public is still seeing much higher CPI ratings? Thank you.
So it's an interesting situation. Of course, we've long used PCE because we think it's just better at capturing the inflation that people actually face in their lives. And I think that view is pretty widely understood. That said, the public really reads about CPI. And the difference really is because the CPI has higher weights on things like food, gasoline, motor vehicles, and housing than the PCE index does. And so that accounts for a lot of the difference. However, over time, they tend to come together. We're given the importance in the public eye of CPI, we are calling it out and noticing it and everything like that. But remember, we do target PCE. That is because we think it's a better measure. They will come together eventually. The typical gap was really about 25 basis points for a very long time. And if it got to 40 basis points, that would be very noticeable. Now it's much larger than that because of the things I mentioned. So we'll be watching both, but again, the one that we think is the best measure always has been PCE, at least since I think we, some 20 plus years ago, moved to PCE.
Thanks, Jerome. Answer your question.
I'd like to weave a couple of things together, Mr. Chairman. Michael McKee from Bloomberg TV and Radio. You said that the destination pretty much remains the same in terms of your end of the year target, but where are you in the journey? We've now seen the federal stimulus programs end. You mentioned consumer spending, business investment have slowed. Are they moving at a pace you would expect, or is demand still greater than supply, too much greater than supply, that you need to do significantly more? And I ask because there are lags in the impact of monetary policy, as you mentioned, and a lot of this might hit in 2023. The strong dollar effect may hit in 2023 when the economy might be weak. How do you know where you are and where you think you need to get to?
Good question.
Well, just talking about demand for a second, as I mentioned in my remarks, I think you pretty clearly do see a slowing now in demand in the second quarter. Consumer spending, business fixed investment, housing, places like that. I think people widely looked at the first quarter numbers and thought they didn't make sense and might have been misleading in terms of the overall direction of the economy. Not true of the second quarter, but at the same time, you have this labor market. So there are plenty of experiences where GDP has been reported as weak and the labor market is strong and the economy has gone right through that and been fine. So that's happened many times. And it used to happen, if you remember, in the first quarter of every year for several years in a row, GDP was negative.
For years.
And the labor market was moving along just fine, and it turned out to just be measurement error. It was called residual seasonality. We don't know the situation. The truth is that we think that demand is moderating. We do. How much is it moderating? We're not sure. We're going to have to watch the data carefully. There is a great deal of money on people's balance sheets that they can spend. The unemployment rate is very low. The labor market's very hot. There are many, many job openings. Wages are high. So it's the kind of thing where you think that the economy should actually be doing pretty well in the second half of the year. But we'll have to see. We don't know that because you do see a marked slowing in the second quarter that is fairly broad. So we'll be watching that. We'll be watching that. Of course, as I mentioned, we do want to see demand running below potential for a sustained period to create slack and give inflation a chance to come down.
Nicole.
The answer shit.
Hi, thank you, Chairman. Nicole Goodkind, CNN Business. When does the committee expect to see a meaningful slowdown in the labor market, and how much weakness will it accept with regard to slower job growth and higher unemployment?
Good question.
Before it pauses or begins to think about cutting rates?
Good question.
So I think you're already seeing.
He won't answer.
You've seen in the labor market what you've seen is a decline from very high levels of job creation last year and earlier this year to modestly slower job creation. Still quite robust, as I mentioned. So you're seeing that. You're seeing some increase in initial claims for uninsurance, although that may actually have to do with seasonal adjustments. We're not sure that that's actually real. There's some evidence that wages, if you look at average hourly earnings, they appear to be moderating. Not so yet from the other wage measures, and we'll be getting the Employment Compensation Index measurement, I think, on Friday, I guess. And that's a very important one because it adjusts for composition. So I'd say you and also anecdotally, you hear much, the sort of level of concern on the part of businesses that they simply can't find workers is probably down a little bit from what it was, say, for example, late in the latter parts of last year. So there's a feeling that the labor market is moving back into balance. If you look at job openings or quits, you see them moving sideways or perhaps a little bit down. But it's only the beginning of an adjustment. But I think most also, if you look at, once you start citing these things, you can't stop. If you look at the household survey, you see much lower job creation, and the household survey can be quite volatile, but it has no jobs created in the last 3 months. So that might be a signal that job creation is actually a little bit slower than we're seeing in the establishment survey. So, executive summary, I would say there's some evidence that labor demand may be slowing a bit. Labor supply, not so much. We have been disappointed that labor force participation really hasn't moved up since January. That may be related to yet another big wave of COVID, and there's evidence that that's the case. But so we're not seeing much in the way of labor supply. Nonetheless, I would say some progress on demand and supply getting back in alignment.
There you go.
I think we're going to be looking at inflation as well. We as I mentioned, we need to see inflation coming down. We need to be confident that inflation is going to get back down to mandate consistent levels. That's not something we can avoid doing. That really needs to happen. But we do think, though, that the labor market can adjust because of the huge overhang of job openings, of excess demand, really. There should be able to be an adjustment that would have perhaps lower than expected increases in unemployment, lower than would be expected in the ordinary course of events, because the ratio of vacancies to unemployed is just out of keeping with historical experience, and that suggests that this time could be different.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So you said the path may be narrowed to avoiding a recession. So how close are we to a recession? And then how do forecasts of possible recessions from banks and economists, how does that make a soft landing you've talked about more difficult?
So as I mentioned, it doesn't seem that the U.S. economy is in recession right now. And I think you do see weakening, some slowdown, let's put it that way, in growth, and you see it across some of the categories that I mentioned, but there's also just the very strong data coming out of the labor market still. So overall, you would say that in all probability, demand is still strong, and the economy is still on track to continue to grow this year. But the slowdown in the second quarter is notable, and we're going to be watching that carefully. Sorry, Edward, what was the
forecasts? How do bank forecasts of possible recessions, economies, does that affect the soft landing?
Well,
shaved his head this morning to get ready for this meeting.
We've said since the beginning, I think, that having a soft landing is what we're aiming for. Of course, that has to be our goal. It is our goal, and we'll keep trying to achieve it. I do think events. At the beginning, we said it was not going to be easy. It was going to be quite challenging to do that. It's unusual. It's an unusual event. It's not a typical event, given where we are. If there is a path to it, and we think there is, it is the one I mentioned, that the labor market actually has such a large amount of surplus demand that you could see that demand coming down in a way that didn't translate into a big increase in unemployment as you would expect in the ordinary course, because frankly the imbalance is so much greater. But we don't know that. I mean, this is a case of first impression. So anyone who is really sure that it's impossible or really sure that it will happen is probably underestimating the level of uncertainty. And so I would certainly say it's an uncertain thing. Nonetheless, it's our goal to achieve it, and we'll keep trying to do that.
Thank you, Mr. Chairman. Jean Young with Market News. I wanted to ask about the balance sheet reduction program. It's been working for a couple months now and in a different environment than the last time the Fed did it. What are you learning about how it's working and how markets are reacting? And is reaching the minimum level of reserves needed in the system still several years away at the current pace?
So she's asking how's quantitative tightening.
So we think it's working fine. As you know, we tapered up into it, and in September we'll go to a full strength, and the markets seem to have accepted it. By all assessments, the markets should be able to absorb this, and we expect that'll be the case. So I would say the plan is broadly on track. It's a little bit slow to get going because some of these trades don't settle until for a bit of time, but it'll be picking up steam.
Talking about selling bonds in the market to suck.
And I guess your second question was getting the process of getting back down to the new equilibrium will take a while, and that time it's hard to be precise, but the model would suggest that it could be between 2.5 years, that kind of thing. And this is a much faster pace than the last time. Balance sheet's much bigger than it was, but we looked at this carefully, and we thought that this was a sensible pace, and we have no reason to think it's not.
Ron G, I think the unemployment that will come from more white-collar workers.
Chairman Powell, Brian Chung, Yahoo Finance. Looking at financial conditions, it seems like the tightening has slowed as of late, with the 10-year coming down, 30-year fixed mortgage rates also going a bit sideways when we talk about a hot housing market still. Just wondering if you find financial conditions tight enough, especially as you continue to raise rates.
So a big piece of that is inflation expectations, break-evens coming down, which is a good thing. It's a good thing that markets do seem to have confidence in the committee's commitment to getting inflation back down to 2%. So we'd like to see market-based, readings of inflation expectations come down. Broader financial conditions have tightened a good bit. I mean, the way this works is we set our policy, and financial conditions react, and then financial conditions are what affects the economy. So we don't control that second step. We're just going to do what we think needs to be done. We're going to get our policy rate to a level where we're confident that inflation will be moving back down to 2%. Confident. So that's how we're going to take it. And of course, we'll be watching financial conditions to see that they are appropriately tight and that they're having the effect that we would hope they're having, which is to see demand moderate and inflationary pressures recede and ultimately inflation come down.
I know,
Thank you, Chair. Greg Robb from Market Watch. I wonder if you can go back a little bit in time to before there was this outbreak of inflation, when the committee put in place forward guidance on tapering asset purchases. I think it was December 2020. There's a recent speech by Fed Governor Waller talking about that and saying that maybe that was too tight, that kind of condition, and it put you a little bit behind. Not his words, but maybe, we're kind of late to react to some of that inflation. So could you talk about that decision, and have you looked at it in hindsight at all? Thank you.
So, yeah, we said that we wouldn't lift off until we had basically achieved our dual mandate goals. And the reason we did it in real time was that the first look at the new framework that we'd rolled out, plenty of people were saying, it's not credible, you'll never get inflation to 2%. Some of our critics now who say inflation is too high were the same ones who were saying you'll never get to 2%. Mm-hmm. Well, but anyway, that's what happened. So we thought we needed to really make a strong statement with that. It wasn't part of the framework. The December 20 guidance was not part of our overall new framework. It was just guidance that we put in place. So I would say two things. One, I don't think that is materially changed the situation, but I have to admit, I don't think I would do that again. We, ultimately the situation evolved in a highly unexpected way for all of us. And, maybe the learning is that leave a little more flexibility than that. But did it matter in the end? You know, if you look at, I really don't think it did. I'm not sure it would have mattered if we'd been raising rates 3 months earlier. Does anybody think that would have made a big difference? I mean, lots of central banks were raising rates 3 months earlier, and it didn't matter. I mean, this is a global phenomenon that's happening now. Admittedly different in the United States, but anyway.
Shit will never get to 1 cent.
Just a lot of people talk about that time, and they talk about a
not
taper
possible.
tantrum that I know you haven't talked about it too much, but that you were worried at the time about repeating that taper tantrum that
you get another
had
question.
experienced as a governor. So was that part of that? Where did that fit into all those? Thank you.
So I think we learned there have been multiple taper tantrums, right? So there was the famous one in 2013. There's what happened at the December 18 meeting where markets can ignore developments around the balance sheet for years on end and then suddenly react very sharply. So we just had developed a practice of moving predictably and doing it in steps and things like that. It was just like that's how we did it. And so we did it that way this time. We were careful to take steps and communicate and all that kind of thing. We were trying to avoid a tantrum because they can be quite destructive. They can tighten financial conditions and knock the economy off kilter. And when it happens, you have to really, in both 13 and 18, really had consequences for the real economy, 2, 3, 4 months later. So we were trying to avoid that. That was part of it. Again, I don't think that's the real issue of 2020 and 21 was just trying to understand what was happening with the reopening economy. That was where the big uncertainty was. And, our view was that the supply side issues would get better, that people would go back to work, that labor force participation would come back, everyone would get vaccinated, schools would open, kids would be in school, and labor force participation would jump back up. That was very broadly thought to be the case. These supply side issues would get solved reasonably quickly, and they just haven't. They still haven't. So that's really the learning, I think, is around how complicated these supply side issues can be. We haven't seen this before in a long, long time, and so that's really what accounts for the pace at which we moved. And we did when inflation changed direction really in October. We've moved quickly since then. I think people would agree. But before then, inflation was coming down month by month, and
October.
We kind of thought we had the story, probably had the story right. But then I think in October you started to see a range of data that said no, this is a much stronger economy and much higher inflation than we've been thinking. And again, we pivoted, and here we are.
April, really.
Nancy Marshall-Genzer with Marketplace. Chair Powell, I just want to pin you down a little bit more on the issue of recession.
Pin him.
So if we get a negative GDP number tomorrow for the second quarter, would the Fed consider the U.S. in a recession? And just remind us, what is your definition for this?
Answer the question,
so the
Jerome.
Fed doesn't make a judgment.
Answer
on that. We're focused on the dual mandate and using our tools to achieve maximum employment and price stability. We don't say there is now a recession, that kind of thing. So that wouldn't be something we do. We would look at the data tomorrow, and no doubt we'll look at it very carefully.
You already know what it
whatever
is.
Implications we can. As I mentioned, though, if you think about what a recession really is, it's a broad-based decline across many industries that that's sustained for more than a couple of months, and there are a bunch of specific tests in it, and it just doesn't seem like that now. What we have right now doesn't seem like that, and the real reason is that the labor market is just sending such a strong signal of economic strength that it makes you really question the GDP data. But again, that's not a decision that we make, and we won't reach a conclusion one way or another on that.
Thank you very much, Simon Rabinovich with The Economist. You said that some softening in the labor market is needed. Within the Fed, there are staff economists who've argued that NIRU, the non-inflationary rate of unemployment, might be as high as 5 to 6% right now, which obviously is a lot higher than the current rate of 3.6. What's your assessment of NIRU? Is that something that came up in discussion with the committee?
So I think broadly, a lot of economists think that the national rate of unemployment will have moved up to some significant extent above where we think it was before. And the reason is there's, it's the usual matching issue where matching has become less effective and that kind of thing when you have the kind of turbulent downturn and the big switches in demand from services to goods and all that. So it could be higher, and my own instinct is that the natural rate of unemployment is higher. Of course, I would add that we don't know it. We can never know where these star variables are in real time with any confidence, but I would say it must have moved up materially. But the other side of that is, as all these jobs get created and people go back to work and unemployment is so low, I think you could, in principle, you could see it coming back down pretty significantly. And that would also, by the way, take pressure off of inflation, because it's that gap. It's the gap between actual unemployment and the natural rate that really is relevant for, the negative slack we have in the economy by the overtight labor market. So if you were to, you wouldn't observe this. It's an unobservable, but you could actually be seeing inflationary pressures coming down if that does happen. And we don't control that, but that's something that logically, if the pandemic and the disorder in the labor market cause the natural rate to move up, then as the labor market settles down, in principle, you should see it move back down.
Ask him, if the next numbers in August, September come out lower, what are you going to do? If they come out higher, what are you going to do?
Thank you, Chairman Jeff Cox from CNBC.com. Just a question about, I hate to keep banging the drum about recession, but most of the polls that we're seeing now from the public, people believe that we're already in a recession or heading for one. Economists pretty much the same thing. They're being told by folks like you and in the administration that we're not in a recession, we're not heading for a recession. Frankly, coming from the same people who told them that inflation was transitory, telling them now that we're not heading for a recession. So what would you tell the public to reassure them now that you feel confident in your forecast going forward and the Fed is ready to respond to a potential downturn in the economy?
No, all I've really said is I don't think it's likely that the U.S. economy is in a recession now, and I've explained why that is the case. It's because you do see a very strong labor market, and I think the public will see that as well. Going forward, what we've seen is a slowing in spending, as I mentioned. We've seen the very beginnings of perhaps a slight lessening in the tightness of the labor market, but it would only be the beginnings. So, and I mentioned that I also said that our goal is to bring inflation down and have a so-called soft landing, by which I mean a landing that doesn't require a significant increase, a really significant increase in unemployment. We're trying to achieve that. I've said on many occasions that we understand that's going to be quite challenging, and that it's gotten more challenging over recent months.
He wants to be the guy that brought inflation down from 9 to 2 and didn't cause a recession.
Thanks, Chair Powell. Kyle Campbell with American Banker. The FOMC has historically tried to avoid the kind of rapid monetary policy tightening that has happened so far this year. How concerned are you that the rate hikes that we've seen thus far might increase risks to financial stability, not just domestically, but globally?
There are precedents for the FOMC moving very quickly. For example, 1994, 1980, even more so. So we've been known to do that when it's the appropriate thing to do, and this year it clearly is. I would say that given how quickly we've moved, I'm gratified that that basically markets have been working. They've been orderly. There's been some volatility, but that's only to be expected. From a financial stability perspective, asset values are down, which in some sense lowers vulnerabilities. It's when they're really high that you would worry that they're vulnerable to a fall. Actually, many asset values have come down. I think you've got a well-capitalized banking system. I think you have households are generally in about as strong financial shape as they've been in a very long time, or perhaps ever, given what the money that's on people's balance sheets. And so you have from a financial stability standpoint, you have a pretty decent picture. Now, there are plenty of macroeconomic issues that don't rise to the level of financial stability concerns. By financial stability, we think of that as things that might undermine the working of the financial system. So big, serious things. That's not to say that people at the lower end of the income spectrum aren't suffering, because they are. They're suffering from high inflation. They're going to the to the grocery store and finding that in many cases their paycheck doesn't cover the food they're accustomed to buying. We're seeing actual real declines in food consumption, and it's very concerning. It's very unfortunate, and that's why we're really committed to bringing down inflation. One of the reasons.
Food consumption. What?
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. I can remember when you held your first news conference and you vowed to be a very plain-spoken chairman, and we're thinking today about the impacts of Fed policy on individuals as well. What would you say to individuals or households who may yet lose their jobs in this tightening cycle in the fight against inflation as they try to translate what Fed policy means to them in this complicated economic landscape? Thank you.
So I guess the first thing I would say to every household is that we know that inflation is too high. We understand how painful it is, particularly for people who are living paycheck to paycheck and spend most of that paycheck on necessities such as food and gas and heating their homes and clothing and things like that. We do understand that those people suffer the most. Middle class and better off people have some resources where they can absorb these things, but many people don't have those resources. So, it is our job, it is our institutional role. We are assigned uniquely and unconditionally the obligation of providing price stability to the American people, and we're going to use our tools to do that. As I mentioned, there will be in all likelihood, some softening in labor market conditions. We need growth to slow to below potential growth. We don't want to, we don't want this to be bigger than it needs to be. But ultimately, if you think about the medium and longer term, price stability is the thing that makes the whole economy work. It's what can give us a strong labor market and wages that aren't being eaten up by high inflation. If you talk to people who are making wages, relatively low wages, they're the ones who are suffering the most from inflation. So it's all the more reason why we need to move on this. Thank you very much.
Oh, he's done. Okay. Interesting. Let's go to, let me shrink myself here a bit. Let's go look at the charts. Let's go to the Bitcoin. The Bitcoin, what do we got here? Ooh. Got a handsome fella. What do we got here for the Bitcoin? Yeah, Bitcoin took off. Holy shit. Yeah, Bitcoin's sitting here at almost 23. We saw it spike up here. It started down here at the beginning of the meeting around 21.7, went up here. It's on a tear. Let's look at ETH. Also on a tear, got up to about 1600 is where it is right now. Let's zoom out a bit. Let's go to like the 2 hour. Yeah, quite a candle going on there. All the way down here from yesterday. I'm glad I bought a bunch down here in the 1300s. That's up right now, pretty good. Move your, oh, there we go. Let me shrink myself here too. Like that. ETH, what do we got? We got momentum moving up. We'll have to see here what goes on. This is just such a pump. about 1610, 1612 looks like where we've hit so far right now. We're right at that top too, about 1613. Let me pull up a different ETH chart to see where the Fibonacci lines are. So got this Fibonacci line here to 1578. It shot above it. We'll have to see what happens here. That's quite a goddamn pump. Would you say trade that? I wouldn't touch this right now. This move is pumping so much that I wouldn't chase it. And I also wouldn't short it right now either because I'm not sure where this is going to go. I don't have any confirmations. Here I am looking at Lever Atlas down here. We're moving up, obviously, on the 2 hour. Quite a goddamn pump in this 2 hours, and from 1487 to 1609. I knew goddamn well I should have taken a long, because I knew it. God, I knew it. But I'm on the stream and I just kind of was lazy. Fix this stock market and make it fair. All would be good. What do you mean by fair? You know what I mean? Like, it's people. The stock market is people doing people shit. Like, what do you mean by fair? There's not. It is. Well, I get it. Big money, big institutions can really manipulate and do all kinds of shit. I don't know. Is it a trap? I don't know if I'd call this a trap, man. This just seems. Like I said, I've been saying, you know, I think we've bottomed. I'm not joking. I think we've bottomed. Bitcoin may not get under 20K again, for all I know, and ETH may not get back to under 1,000. You know what I'm saying? This is a pump. I probably see it coming back down some. This was kind of a bullish day. We'll have to see. I got 3K is better to buy Bitcoin or ETH, which can be better for low budget. Zoopla, I'd rather maybe get both. Both are give them 2.5 years. They'll be worth more than 3K most likely, in my opinion. It's more likely going to pump and go back to 21K. Very possible. What's up, Diggy? Go back to some other questions, maybe. Rallied on the day, then dumped the day after. Maybe it did. I don't know. I would say Fortnite's the best coin for bull run. Nobody knows. I'd say what you believe in, what you truly believe in. I really believe in Gala and Ethereum. I also believe in Matic. I also believe in XRP. What you believe in. Throw your emotions out the window and be patient, logical. It's best. That's what I tell myself, anyways. If it goes down to 21K, it'll go right back up again to liquidate the shorts. Maybe. Shit, did I shrink this for YouTube, or did I? Oh no, I just totally screwed YouTube. Shit, I had my stupid face on it the whole time. What do you say about SDAO? I don't know what SDAO is. Fed didn't answer tomorrow. GDP, what do you think it might happen? Negative results happen in the market. I think the market's anticipating a negative number. So I don't think it'll do much. I think my eye's a little bit more on Amazon and Apple, because they're tomorrow also. So I don't know. What are you saying? We bottomed while you always said Bitcoin is more likely to go lower. Hazefa, you haven't heard me in a while then. Last week, I changed my mind because I did a lot of deep diving last week, looking at a lot more data points, questioning if I thought it was going to go lower. And I came to the conclusion that I think there's about 80% probability that we've bottomed. Zoopla, thanks for the roses. For a lot of reasons. One, that most people think everything's going lower. So that's kind of a sign right there. Because usually it's the opposite of what the consensus is. And then I looked at a lot of data. And the final piece that showed me was when I looked at the monthly RSI on Bitcoin. Now, I think we could go back to those prices. But I just think it's, from what I can see, it seems like a very low probability that we go lower. And plus, looking at the macro, good chance that we bottomed there too. Inflation's peaked. We'll have to look over the next coming, I think Q3 is going to be a really big deal. Looking at that GDP, looking at those earnings reports, and the next few months really. is a big deal. Next few months. You're welcome, Josefa. What's better, crypto or stocks? Clearly, in my opinion, crypto by far. Stocks are less volatile, which means they also have less upside, but they have less risk, in my assessment. All right. So be sure to click the link in my TikTok bio. It'll be here somewhere. It'll take you to this resources page here. Be sure to join our Discord right here. I'd say get that card. This is where I buy crypto. Watch my masterclass about how I get free Bitcoin and Ethereum. A lot of good stuff here. Definitely get a ledger. Like, stop screwing around. Get a ledger, for the love of God. That's where I trade crypto. It's that tool I'm using. I did put this back up, but I'll probably be taking this down pretty soon. This crypto consulting. I probably won't leave that up very long, but definitely join the Discord. Any other thoughts or questions? Did you guys have thoughts on what Powell said? He didn't really say much. He dodged every fucking thing. Basically said, we will look at it as it comes. But I took away that he says, listen, we're still hawkish. We're still looking to fight inflation. We're not afraid to, if the data says so, we're not afraid to raise interest rates even more than 0.75. I basically heard him say, we're not afraid to do a 1% hike. That's what I heard. So that's interesting. I can't get money on my ledger. How did you get money on it? Everything fails. Coach, I don't know what your specific problem is. So I couldn't help you there, probably. And I wouldn't, please don't schedule a consult for that. I don't want to do, that's not what they're for. Not for technical help like that. You can find answers on YouTube, and you can message ledger and all that stuff. But something, I don't know what you mean by putting money on your ledger, because your ledger is just a wallet address. You just send crypto to your wallet address. Today, Powell said they may relax the hikes. I didn't hear that. I didn't hear that, Daggy. Did you hear that? I heard more, we're going to continue course, and we're not afraid to do even higher hikes. He said that multiple times. Could they relax them? Yeah. If the data comes out, of course. He might have said that. But I definitely heard him say more about, it sounded more hawkish to me. But yes, the truth is they could relax hikes. They could. If the data comes in really positive, yeah, they could. Because then they're like, oh, well, maybe we don't need to raise anymore. I could. So I think that he's on both sides. I think that they are still remaining aggressive because inflation, 9.1%. That's the most latest data they have. So they want to maintain that aggressive stance and keep the market taking them seriously. But their next hike isn't until for 2 months, until September 19th, I think. So there's going to be 2 inflation reports that come out between now and then. Where do you think ETH is going from now on? It's not really something I can answer. Over the course of the next 2.5 years, up from here. But again, I think we've bottomed. That's not what most people are saying by far. And I've been pounding the table on that since last week when I had to give myself a come to Jesus moment after having a lot of compelling data that I found. I think we've bottomed. And I've put a lot of buys and trades in place based on that. I think we've bottomed. With that being said, if we go lower, great. I see it as too risky to cross my fingers and hope we go lower. If we go lower, great, I'll buy more. But we're at such great undervalued spots. I'm buying pretty aggressively ever since last week. You think ETH will go under 1,300 again? I think that's pretty possible. It's those quite type of questions that paralyze you, you know? I mean, possibly. Be careful of paralyzing thoughts that stop you from doing anything. Because when ETH is $10,000 in 2.5 years, if you remember this moment, you're going to go, I can't believe I was waiting for 1,300 when it was in 1,600. What a fantastic return in 2.5 years. That's from 1,600. Anything with when you get to the 2,000s, you're going to be like, shit, wish I'd have bought more in the 1,000s. It's just not going to stop. It's a mental bug. Can you share your trades? Go join my Discord. I typically post my trades when I do them. Just shorted ETH at 1,600 might just be a scalp. I think that would probably be the safer way to go, Deggy. Because you're in the profit right now, slightly, because it's 1593. Can Quant get up to 5,000? I have no idea. Quant's not one I follow much, but it's certainly one of the most common things I get asked about. Quant and H-bar, I'd say I get asked about those more than anything. And not just recently. I mean, always. I mean, for this year. Keeping an eye on it. Now you're at 1590. Yeah, Jaggy, you're definitely in the profit. Slight profit. And that top there is what? 1610. You got resistance here at probably 1581 at this Fibonacci line. Support, excuse me. Let me move my face out of the way. And it hit right here. Follow that over. It hit about right here, so that's interesting. I do have this trend line going up here. It would put us at about 1675 or so. But it broke this trend line, came down here perfectly to this fib line, and bounced off of it, broke through the bottom of this, and now is back in here. So it's hard to tell, man. I mean, ETH can make its way up to 1675. You could also come back down to this golden pocket around 1530. Hell, it could come back down here and go lower. Let me go to the 4 hour. What a bazooka candle. Yeah, I got a. Wow, we're still below the zero line here. So ETH could definitely come up more. This is on the 4 hour. My best guess is we have some green days ahead of us. That's my best guess. I mean, we've had them. When did we start pumping? 26th. Yeah, it was just yesterday. I knew it. God damn it. I knew to take. I was like, I think I should take a long here, and I didn't. I knew I should have taken one here today. Oh, but now I can't chase it. See, I feel myself getting emotional, so I have to not. I can't do anything. I have to stop myself from doing anything. Let's look at the Bitcoin real quick. We did get up over 23. Right now we're at 22.8. Here's this blue line right here is the 200 week heat map, basically the 200 week moving average. So that's pretty strong resistance at 22.6. As you see, it came above it and then pretty quickly came back below it. Down here to roughly this Fibonacci line around 20,900. And then it bounced off of that, and now it's up here riding this 200 weekly. Interesting. We're still below that zero on the 4 hour. Went well into the oversold zone. My best guess is that we go green here for a bit, and maybe Bitcoin finally makes its way up to. God, Bitcoin got up to 24. I mean, Bitcoin could make its way up to 26, 25, 26. Yeah, it could do that. God, it got up to 24 on July 20th. I guess I didn't realize it got that high. What a good time to buy back down here with the 20,800. Were you expecting a pump after the Fed meeting? For the most part, I was expecting green. And I didn't take a trade, and I'm just upset with myself, but because now I feel the emotion in me, I won't allow myself to do anything because I can't think straight. Killing free time, sure did. Yeah. Because I figured they'd do a 0.75. That's what the market expected. And then Powell would come out and say nothing. She did, basically. Although he did still maintain that we're in a hawkish, aggressive stance to fight inflation. But he doesn't feel we're in a recession. And, you know, I think the question is, what's the strength of the recession? It does feel a bit like a weakish recession currently. Good long-term stocks to buy into. I don't buy stocks, so I don't know. You know, I'm a crypto guy. Let's break this down into the 1 hour. Let's go to the 30 minutes. See what that looks like. Gotta get a pump. Nothing telling me there. Maybe we're hitting resistance here around 23,000 for the Bitcoin. Very on the 30 minute, getting to be very overbought. God damn, it's over 103. Let's go to the ETH. It's only 30 minute though. ETH also getting very overbought around 100. So I think we're hitting resistance. We got this spider line going on here, kind of meeting the top of this. If anything, I would short term maybe short it. I don't know, man. I can't think straight because I'm upset with myself that I didn't take a long back here. It's such a solid probability trade. And I'm just upset that I didn't, you know. It's just So when you feel that, you just have to not do anything. You have to let yourself get back to balance. Because whatever I do, it'll probably be wrong. So I can't think straight. Damn it. All right, I better go. We've been on here for over 2 hours. You know, we went through the Fed hike, lots of questions, watched the meeting together. Now we're discussing it. Any last things you want to talk about, or crypto or the Fed or anything like that before I get off of here? Definitely go join the Discord. Click the link in the TikTok bio, and it'll take you to this resources page here. The Discord is right here. Join the Discord. I'm in there a good amount. There's wonderful people in there. If you want to trade, check out Bybit. God, for the love of God, get yourself a ledger. This is where I buy crypto. You can get XRP on here and everything. And here's a free masterclass showing you how I get Bitcoin and Ethereum for free. Here's all the socials. If you like what you've been seeing here and you haven't come further into the daily crypto bull world, I encourage you to come in further. I think you'll like it. Hey, just got here. Do we buy or wait? I mean, in my opinion, I'm buying for the long term right now. Like, when I say long term, 2.5 years. Do you think Bitcoin crossed 23K? It already did. Josefa, you're welcome. Think about those people who bought ETH at 870. Why? Joined. In which channel you share your trades? Go join the Discord. I put a lot of them in there. Coach just joined. Oh, which channel on the Discord? I usually share them in either the general or the crypto chat. But be a contributor. Get what I'm saying? Don't just be a taker. When you come into the Discord, I say this to everybody, it's a community. Be balanced. Try to give more than you take. So don't just come in there to suck out things. Be a contributor. Be in there. Okay? Anything else? By the way, just to be clear, I think there's about an 80% probability, and it kind of raises by the day, that we've bottomed. So if you're still on the sidelines, paralyzed, thinking we're going to go to some magically lower number, and you're not doing anything because you're hoping and wishing for that, and I think you should really reevaluate that, because I think we've bottomed. Maybe we come back down to where things were, maybe, but I don't think we go any lower, and I think there's even a decent chance we don't get back down to where we've been. So that's my opinion. And I was a pretty strong believer that Bitcoin was going to get to 12K, maybe even sub 10, and ETH was going to get under 500. But I realized that everyone started saying that eventually. And I thought, well, I better look closer at things, because if that's what everyone's thinking now, that concerns me. And I spent several days last week looking deep at the data, charts, historical data, and I finally arrived at the conclusion that there is a significantly higher likelihood that we have bottomed than we're going lower. And the reality is, regardless of any of that, where do you think the price of Bitcoin and Ethereum, etc., is going to be in the next 2.5 years after the Bitcoin, which would be after the Bitcoin halving? It's going to be a shitload more than it is right now. So it's massively undervalued. Buy. That's what I told myself. So I've been buying pretty heavy the past week. Pretty fucking heavy. Not to sell it next week or what's going to happen next month. I'm thinking, when I'm making these decisions, I'm thinking about 2.5 years out. Because that's the only way to really get an edge. Because everyone else is a bunch of retail newbies just hoping that they buy and the price never goes below where they bought at. Seriously. And that might be you. And I'm not insulting you or making fun of you. I'm just trying to bring light to reality to help anyone that will listen. Most people won't listen. Really look yourself in the mirror and just say, where do I think the price is going to be after the Bitcoin halving in the next bull run? And is today a good value? That's it. That's the only thing to think about, in my opinion. Thanks for the fire, Ranjit. Much respect. Thanks for your time and knowledge. You're welcome. Evalera, come on into the Discord community. Maybe it's your emotions talking. About what? I'm not sure. I still think it's going down. That's fine. But do you think it's going to be worth a lot more in the next bull cycle than what it is right now? And is there more risk to wait if you haven't been accumulating? And if it goes down lower, that's just even better. But right now, if it doesn't go lower, how much regret and anger and pissed off at yourself are you going to be? How much regret? A lot. So right now I see not buying in these prices to be a lot riskier than waiting. Or a lot less risky than waiting, excuse me. You're hyping up the coins, but think about it. If US banned mining or crypto, what are you talking about? It can't ban crypto. I mean, it could try to, but it would be absolutely obscenely bad for the US to try to ban crypto. Fidelity, familiar with Fidelity? In the next 90 days, they're going to allow Bitcoin to be in 401ks. Everything is trending in the direction of Bitcoin. The US is not here to do things like that. And they're not going to ban mining. That's bad for them. They're not China. China's just stupid. I know people still waiting to buy ETH below 1,000. Me too. And it's not even that they're waiting to buy below 1,000. There's just no price. Because they're just, no matter what it gets to, they're going to think, okay, it's going to go lower, then I'll buy. And then it's going to go lower, and they'll go, oh, maybe it's going to go lower. And then if it did get to a low enough price, they'd be like, oh, it's dead. And they'll just never buy. Because remember, people, hear me on this right fucking now. When Bitcoin was at 69,000, and I looked at you, and I said, Bitcoin's going to get back to the 20s. And you said, first of all, you said, no way, never getting there. And I'll go, well, what if it did? You'll go, I'll sell my house and buy it all in the 20s. Those same people are the same ones right now saying, I'm waiting for it to go lower. Delusion. Complete lack of self-awareness. We all have a lack of self-awareness, myself included. The best we can do is just get a little bit more. And I urge you to look yourself in the goddamn motherfucking mirror and say, where do I think the price is going to be in 2 years in the next bull cycle? And is today's price dramatically undervalued from what the price I think it's going to be? And the rest of it, there's nothing else to think about. If it goes lower, wonderful, even more undervalued. But it is stupidly undervalued right now. If you don't listen to what I'm saying, you'll regret it. In my opinion, not financial advice. Appreciate all the good people in here. Other countries have banned it. Yeah, China. Yeah, stupid countries. And they can't. They can't actually ban it. You can't ban Bitcoin. You can't actually ban this shit. And the US is never going to do that. Europe's never going to do that. Because it's not good for them. And it's not what the people want. And it's good for them to encourage it. It's technology. It's like banning technology. Literally, that is what it is. If you fight technology, you lose. That has been historically correct every single time as back as recorded record. And they are the same people who know bearing on the market at all. Small fries. What a speech. Thanks, send it. It is, because I'm pleading with people. I'm pleading with them. Begging them. Don't stop. You're fucking yourself and you don't know it. But what if it goes lower? Because they can't stomach, like most people, wherever they buy it at, they can't stomach it going down $1 for one fucking moment from where they bought it at. So they're trying to time the exact penny bottom and then try to sell at the exact penny top. Guess what? Those people lose 100% of the time. And that's most people. Because it's rookie newbie shit and they're rookie newbies. And I've been those people. So I sympathize. I empathize. And that's why when I'm saying this shit, I'm talking to past me. Because I see all kinds of people that are past me. As in like time-wise, like years back. Past. Ghost of my past. And I'm trying to save myself from making completely ignorant decisions. That's all I got. If you like what I'm saying, come join my Discord. I'm in there a good amount. Wonderful people like Degimon here are in there. And Ron G, if he's still in here. And plenty of other people. Come join the Discord. This is the type of shit you get. You get real talk. Welcome in, send it. And be active. You know, I'm not in there every moment. It's not the most active Discord in the world. I don't like super ridiculously active Discords because you can't keep up with the goddamn thing anyone's saying. It's more intimate, our Discord. And it's a good thing. Where can I find your trade? I haven't made a trade right now. I'm not in a trade right now. So I don't have any to be in. The biggest thing that I'm pounding the table for is that I think we've bottomed. I've been saying that since last week. And so I think the pain of waiting, the regret, the risk of waiting, I'm not saying put every dollar you have in right now, but odds are you have an income. Odds are you can take a portion of your money from your income and put it into stuff. And hopefully you've been doing that. None of this financial advice. These are just my opinions. Do whatever you want. But you're here to hear my opinions and my thoughts. But yeah, a lot of trades that I post, I'll post them in the Discord. But I'm not in any right now. But send it. I also say, please be, anyone that comes into the Discord, please be a member of the Discord, not just a taker. You know what I mean? Try to contribute. All right, it's almost 1 o'clock. I've been on here for 2.5 hours. If you've been on my lives before, I mean, who else do you know doing lives like this? 2 hours. My typical live is 2 hours. I rarely go less than 2 hours. Even though I mean to get the hell off sooner, I just keep talking and answering questions. If this doesn't show you what you get by coming a little further into the daily crypto bull world, I don't know what does. So come on in. I have nothing to lose, that's for sure. Thanks for the rose, send it. Figured numbers. So I think you mean, I'm assuming you mean what I think things will hit in the next bull run. So I try to be really conservative with that. And so I plan out my buys and exits, 2.5 years ahead of time. So right now, things are certainly in my buy zone. Because I think Bitcoin easily hits 100K. I think that's pretty conservative. I think ETH easily hits 10K. I feel like that's pretty conservative. I think Bitcoin could certainly get much higher than that. I think ETH could certainly get to 15, 20K plus. But I'm trying to be conservative. I think XRP can... It's gonna fucking blow you out. But I think XRP, I'm conservative when I say I think XRP can get to $10. It's at like 34 cents right now. What's this guy talking about? He's crazy. I know. XRP's all-time high was $3, and that was in the 2017 bull run. It did not surpass that all-time high in the 2021 bull run. Why? Because of the SEC and the case it's been in since 2020. So 2 bull cycles out, so 2021 and 2025. 2024, really? Like, for it to go up 3x from its all-time high 2 bull cycles ago? That seems pretty conservative to me. Plus, where the entire crypto market cap will be, I think it'll be at least 5-6 trillion, with potentially being 10 trillion in the next one. I think XRP is a fucking amazing play. I do. My profit in crypto? What are you talking about? I'm not sure what you're asking. You think I'd post my profit in crypto? Like I'm a public company and I post quarterly earnings reports? I have no intention of doing that or even keeping track of that. I just know I made a lot more than I made a lot. What about XLM? I don't like XLM. I don't like the guy behind it who came from XRP, who's been selling XRP forever, but his bags are finally empty, so no more of that sell pressure. I better go. I've been on here. I got so much shit to do. And it's getting hot out. I'm hungry. Been on here for 2.5 hours. All right. I'm out.